I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This equity market recovering a little bit this morning. Good morning to you all. We are negative, but by just 0.2%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Ferro.
Live from New York City, we begin with the big issue. Russia pushing on, companies pulling back. A massive Russian military convoy edging closer to the capital amid heavy fighting throughout the country. Interfax reporting that Russian forces will continue their, quote, military operation until they meet their goals. President Putin pushing forward despite corporations backing out in energy. Shell following BP's departure, citing Russia's, quote, senseless act of military aggression. Shipping giant Maersk suspending its Russian bookings, saying the stability and safety of its operations were, quote, directly being impacted by sanctions and indirectly impacted as well. And the banking world following suit too. Lenders SocGen, Credit Suisse said to no longer be providing money to finance commodities trading there, some restricting lending more broadly. Team coverage starts right now with Bloomberg's Maria Tadeo in Warsaw and Anne-Marie down in D.C. Maria, what's the latest?
Well, Jonathan, the Russians say this operation will continue. By that, of course, we mean the attack now on all fronts on Ukraine. They say will continue until they meet all of their targets. Of course, we know that in reality, that means that the government in Ukraine, led by President Zelensky, would have to go. The country would have to give up its weapons, become neutral, and, of course, ditch that pledge to join NATO and the European Union. The reality on the ground in Ukraine becoming ever more concerning. We're seeing that this is now a full escalation on the military and combat front. We've seen yesterday footage, horrific footage of fighting that now targets essentially everything. This is not just about military points. And I had a European official telling me the nature of the war changed last night with that bombing that hit residential offices. Meanwhile, at the same time, we have the Ukrainian president today addressing Europeans, saying you need to do more. You need to step up, whether it's weapons or sanctions. Russia's now behaving like a terror state. Having said that, when you speak to Ukrainian officials, they say this is day 6, but they will continue to fight, and the will to resist is there. So again, the concern, of course, is that we're going to see a big escalation as Russia becomes ever more impatient about what is now a much longer war than they anticipated, Jonathan.
Companies around the world adjusting to a lot of this. Just getting a headline from VTB. VTB Commodities Trading Unit is winding down metal positions. Anne-Marie, the talk's ongoing. There are hopes for more talks. The base case of how that turns out, I have no idea. What we do know from this morning is that China and Ukraine, Anne-Marie, spoke. What was the outcome of those talks?
Well, China has been pushing for Ukraine and Russia to have discussions about this, to end this invasion, although China is very careful in how, of course, they word all of this. China, of course, has been walking this very fine line. We saw them at the UN. They didn't go for a veto, but they did abstain alongside India, the United Arab Emirates, we should note as well, considering that President Putin this morning spoke to Mohammed bin Zayed of the UAE. But right now, Jonathan, China is evacuating their citizens, and what they want to make sure is that civilians are protected. That was the outcome from the foreign minister speaking. They want to make sure that civilians are protected, and the reports that we're seeing with the mayor of Kharkiv saying that Russia is now bombing and attacking civilian areas. This is not just military operations.
Hearing that Secretary Yellen spoke with the French finance minister about Russia as well. Looking at the commodity moves we're seeing at the moment, you can imagine why the administration is so focused on what could happen here at home domestically off the back of this AMH. Brent at 103, WTI at 100. We caught up with Devon Energy recently here at Bloomberg. The quote from the CEO read as follows: "I'm a little mystified that there hasn't been some dialogue between them and the administration." The CEO went on to say if they were to reach out and maybe had a little bit more of a collaborative approach, it might provide some cover from investors who might be annoyed with them for doing more, for pumping more, investing more. Anne-Marie, can you believe that there hasn't been that outreach from this administration to the oil patch to boost production here at home in America?
Yeah, this is going to be one of the issues the president's going to have to address this evening, right, Jonathan, when he gives his remarks to State of the Union, because the foreign policy issue he's dealing with right now, and he's becoming a wartime president, means higher oil prices. And back home in the United States, to everyday consumers, that trickles down to higher gasoline prices. And Russia is a commodity superstore. So actually, it means higher prices in general. We could see higher wheat prices, aluminum, palladium, et cetera. And all these things feed into the supply chain, and that can mean higher costs for everyday consumers. Jonathan, I do know that there have been some company outreach within the administration. I wrote a story about how Exxon was going to have to be one of those companies that had to shift banks to make sure they continue to pay their workers, because one of the banks the U.S. administration was going to sanction was one that Exxon used. I know you just read that headline off about VTB. We should also note that Europe today, our reporting shows a draft list of what those de-swifting banks can be. VTB is one of them, and they are one of those banks that is highly integrated in the energy trades.
AMH, the spillover, I don't know if we quite fully understand, have got our hands around how big this might be. AMH over in D.C., Maria Tadeo in Poland today. Maria, thank you. Let's just reset for a moment. 25 out from the opening bell, 25 minutes to be precise. Futures still down a third of 1%, but we were down more than 1%. There was this monster bid into the bond market. Treasuries rallying and rallying hard. On the 10-year, we give a lot of that up. On the 30-year, almost completely. The 10-year down 4 basis points to about 179. We were threatening to break through 170 at 1.2s at 136, down by 7 basis points. We broke through 130 at 1 point, so we bounced back there. But just think about where we were on Friday. The higher the session on Friday on 10s, north of 2%. On 2s, north of 160. We've come in 25, 30 basis points on those two maturities. And this quote from BlackRock, I think, sets the stage for a broader conversation about what's happening here. BlackRock said this: the Russian invasion of Ukraine is a human tragedy. They went on to say, we now know what we are dealing with, a protracted standoff between Russia and the West. We also think it has reduced the risk of central banks slamming the brakes. It's that last line that we need to discuss. Does it really reduce the risk of central banks slamming the brakes? With us now, Crossmark's Victoria Fernandez, Tallbacker's Michael Purvis, James Athey of Aberdeen Asset Management. Victoria, let's start there. That's the hope. I think that brings some balls here in America, some comfort for the Federal Reserve and the path forward. Do these events change things for them?
So, Jonathan, you know my thoughts on the March meeting, and I've always said I didn't think the Fed was going to go 50 basis points, that they were going to do 25, because they didn't want to jump out of the gate and go full force. They wanted to take slow steps, because at the time, it was a concern that maybe inflation was going to peak in the first quarter, and they didn't want to get over their skis. They wanted to be able to have some optionality. Now that optionality is coming more from geopolitical tensions that feed through to inflation. Obviously, if this continues on for a while, we're going to see gas prices continue to be higher. We're going to see commodities remain higher from this jump that we've seen over the last 48 hours or so. And so that feeds into that inflation story. But this is what gives them a little bit of cover, a little bit of flight to quality we've seen in the bond market. And I think that keeps them at 25 basis points in 2 weeks.
James Athey, it might take some pressure off them for the March meeting, for this meeting on March 16th, to do 50, and maybe they end up doing 25. When I look at the estimates for March 10th, everybody says, James, that one data point can't change a story. Let's talk about how we might feel on March 10th if we got an 8 handle on CPI, James. I wonder how quickly we'd readjust our calculation on the path ahead after that.
Yeah, I mean, we shouldn't, John, right? I mean, as you say, we shouldn't be shifting around forecasts based on one print, but it does look particularly scary. I mean, I agree with Victoria in the sense I didn't think they were going to go 50 anyway. If you add up the individual Fed speakers, there didn't seem to be a majority in favor of 50 to sort of open proceedings in March. But in my opinion, this doesn't reduce the pressure on them to act. This increases the pressure on them to act. Essentially, what we're seeing is a stagflationary shock, which is pushing on the forces which already existed. They have been put in a position where they're miles behind the curve, partly by their own actions and partly by things which are going on well outside their control. But realistically, they were hiking to deal with high inflation and high inflation expectations in spite of falling growth momentum and falling real wages, not because of. So the usual means by which they would add up the various variables to get a policy outlook was somewhat giving conflicting signals anyway. And I think what we're seeing in Russia and Ukraine pushes commodity prices up, as we've already heard, and it's going to squeeze real incomes further. So it just exacerbates the forces which already existed. Having 0 rates and buying bonds when inflation is 7 is heinous. Doing the same when it's 8 is only marginally more heinous.
We're expecting a step up in a CPI print, Michael Purvis, on March 10th, ahead of that March 16th meeting. I'd love your thoughts on this topic, because a consensus has formed pretty quickly that this takes some heat off the Fed. James Athey's point is that it leaves the heat on, maybe even turns it up.
Look, I think putting the Fed aside for the moment, one of the things that the markets has been repricing is not just March, but the terminal hiking trajectory right now. So we've already seen, 3 years out, the terminal hike, the terminal rate rather, being cut down by 25 basis points there. I think that's in many ways for equities, probably much more significant than whether we get 50 or 25. And I would completely agree with both of my co-guests that we're on the, I was on the 25 path before the invasion, and all the more so now. I think the look, at the end of the day, this tragedy of Russia's invasion of the Ukraine, I think the Fed it's a huge brainer for the Fed, because I think you can very much agree with James's point that there's one of the clear outcomes is higher oil prices and higher food prices there. And the countervailing point is that there's sort of this geopolitical mess, and we need to, the Fed's going to feel obligated to support the economies and not necessarily disrupt emerging market currencies and emerging market fundamentals by being too hawkish here. So my guess is that the Fed's narrative coming out of all this thing is going to be a little bit probably nuanced and a little bit vague in a way, but I don't think they're going to be, when push comes to shove, they will be marginally more dovish than hawkish here, even if oil stays above $100.
And we'll keep building on that. Michael Purvis, James Athey, Victoria Fernandez. Crude above $100 on WTI, Brent at 103.18. Just hearing from Barkinder, who says OPEC plus, the plus being Russia, that pact to continue regardless of the challenges. Also seeing a headline on the Bloomberg right now. The UAE and Russia agree on the need to preserve stability of the oil market. That's something I'm not sure anyone can guarantee at the moment. Let's get you some stock moves ahead of the opening bell, about 20 minutes away. Here's Abby.
John, well, related to the oil market, let's start out with the energy complex, because it is, of course, popping. We have WTI crude up 5%, really soaring above $100 per barrel at its highest level since July of 2014. On this, we have Chevron higher. We also have aluminum higher, this on output risks related to refineries and smelters in Ukraine and Russia. This is sending Rio Tinto higher. On the other hand, Bank of America down about 1%. Other banks lower, too, as yields come in, that bid for bonds. And then gold is higher, but blockchain, or excuse me, a Bitcoin really sharply higher, up 6%. That's sending Riot blockchain up 6.7%. So those are some movers related to the Russian invasion of Ukraine. As for retail and the state of the U.S. consumer, unrelated to that war, Target up 14%, headed to its best day since November of 2014. Kohl's and Chico's also higher. This very wide variety of retailers all put up great quarters. And Target, very importantly, John, they're saying that the pandemic boom, that those trends are really lasting, investors liking it. Again, Target up 14%, the best day since November of 2014, if those gains hold.
Abby, thank you. Coming up on the program, the administration leaving energy sanctions on the table.
We have not taken some steps on energy sanctions, in part because we weigh that. That doesn't mean they're off the table.
That conversation up next.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's individual circumstance and decisions.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Russia invades Ukraine.
Circumstances require firm and immediate action.
The sanctions we impose exceed anything that's ever been done.
Turn to Bloomberg for up-to-the-minute reporting from around the world.
The Europeans change course to help Ukraine in this fight.
The most powerful forces in the world are watching from a distance.
And analysis of what it all means to you.
How quickly does this start to test the unity of the EU?
How closely aligned Russia and China really are.
Energy is on the table.
Keep it tuned to Bloomberg Television and Radio.
We're willing, if necessary, and I think it will be necessary, to go further. There is plainly more to be done on SWIFT. We can tighten up yet further on SWIFT. Even though it's had a dramatic effect already, I think we do need to go further. There's more to be done on Sparebank, more to be done on the freezing of Russian assets.
There's more to be done. The words of the British Prime Minister Boris Johnson in Poland today, speaking to his counterpart. Will they focus on energy? Right now, crude up more than 5%, 101 on WTI, Brent 103.60, up by almost 6% on the day. On the year-to-date, Brent up more than 33%. President Putin speaking with the UAE ahead of OPEC's meeting later this week, saying discussions focusing on, quote, supporting stability in the global energy market, according to a Kremlin statement. Joining us now, one of the best worldwide, Javier Blas of Bloomberg Opinion. Javier, can they guarantee, quote, stability in the global energy market?
I think it's going to be very difficult that they can guarantee stability in the energy market unless they are willing to add a lot more production into energy market. And so far, all the indications are that OPEC just wants to increase production by 400,000 barrels a day, which is what it has been doing for the last few months. And it already got us into trouble before even the invasion of Ukraine started. So no, I don't think that OPEC is just going to provide much stability to the oil market unless Saudi Arabia and the UAE wants to break with Russia and really increase production significantly in a unilateral way.
Javier, you and I have been talking about self-sanctioning, self-imposed restrictions of oil majors. They haven't been told, they might have been asked, they might have been pressured, but they're acting. BP, Shell. Shell said this. They cited Russia's senseless act of military aggression. Shell are out, BP are out. Javier, Total, what on earth were they talking about this morning?
I was shocked because when I saw Bruno Le Maire, the finance minister of France, saying that the actions in Ukraine require all companies to act, I thought that it was a given that Total was going to announce that it was withdrawing from the country. However, put a statement that it was really surprising and announced that it will not invest, it will not make further investments, but it didn't say anything about leaving the country. So for Total is staying. There is a conversation later today between the French government and Total CEO. So I will expect that this may change over the coming hours. I was deeply shocked. I mean, Total is a company that is willing to go where other international big companies didn't want to go. Myanmar, Yemen, Cuba, Iran. But to stay now in Russia, it's really surprising.
Javier, these guys spend so much time talking about things like ESG. When it comes to sanctions, do you think that they see the writing on the wall? Do you think they see the direction of travel here and think we've got to act now? Or do you seriously think there is a moral obligation that has gripped the C-suite of some of these companies and they've just decided enough's enough?
I think it's a combination of that. I mean, I do think that they see the writing in the wall and they see the direction of traveling. But I also think that some CEOs and chairmen are deeply shocked by what they have seen. I mean, it just only a few days ago, everyone thought that Putin was not going to invade, and people in the oil industry were sending that message, and everyone got this wrong, or most people, I got it this wrong. I didn't thought that Putin was going to invade, and I think that there is a sentiment of shock within the oil industry that this happened. But I also think that the sanctions certainly are not there. The West is not going after oil and gas for now. But everyone that you talk in the oil industry, whether it's in the United States or here in Europe, think that the direction of travel is that.
They're behaving like the sanctions are there already. Javier, thank you, sir. Javier Blas of Bloomberg, fantastic as always. Victoria, I know you like the banks, you like energy too. Let's save the banks for later. Energy. Energy in Europe right now is a tough one. The US, is that more obvious?
Yeah, well, I mean, it's tough. Look, we obviously think that at some point sanctions in regards to energy are going to come into play, not just the self-imposed kind, but the mandated kind. And I think right now, I mean, the headlines are changing constantly, but Canada is the only country that has really imposed a ban on imports from Russian oil. So I think you're going to see other countries start to follow suit with that. Obviously, when we chose energy as one of our favorite sectors for the year, it was at the beginning of the year, and we saw a lot of upside potential there. Now there's going to be a lot of volatility here, but we do think it's going to continue to be a space that's going to do well. One, because of the pressure on pricing, upward pricing. I think Morgan Stanley is saying they're seeing Brent at $110 on average, possibly up to 125. And that actually helps Russia. So that's something people need to think about as well as they continue to collect that. But look, we're looking at companies like ConocoPhillips and Marathon Petroleum. We like the companies that have to do with some of the transportation of energy. So I think that's where you have to focus. We wouldn't be focusing, obviously, on European at this time based on what we're hearing. But I still think long term, it's a sector we want to be in for this year.
You mentioned a call from one of the banks, Goldman, at 115, 1 month price target on Brent. Goldman's Dominic Wilson said this: the market may be underestimating the risks of tighter supply on pricing. I'm going to come to you on this one, James. Are we underestimating the broader story? More importantly, because we haven't got a proper market on dollar ruble. Things have changed. Things are shut and closed in Moscow, so we can't actually exit some of these trades there too. James, I just wonder when it comes to crude, whether it's too early to draw any conclusions about what could happen here, given we haven't seen this really spill out, bleed out to the broader commodity market yet.
Yeah, I think that's fair. I mean, as we've just heard, the sanctions story is evolving day by day, and quite obviously, energy sanctions are, an extreme, not because they're, undesirable in terms of the impact they will have on Russia. Of course, that's actually, why they are desirable in the first place, but rather because, we have a lack of energy independence, certainly within Europe. And so forth. There are some pretty heavy reliances and actions, therefore, to pressure Russia via the energy market will feed back into domestic European economies in quite a nefarious way. And therefore, political leaders there are reluctant to engage. But, we saw just in the change in actions prior to the weekend and then over the weekend that there is such broad political agreement and broad political pressure to really try and influence the Russian actions via financial means that we can't discount the idea that Russian exports of energy products may end up being sanctioned, at least partially, if not entirely. So, yes, it's a fluid situation. The oil market, commodity markets in general, were on a tear anyway. I think part of that is the self-fulfilling prophecy of higher inflation and real assets and commodity assets as an inflation hedge, and that feeding off itself. This certainly isn't a force in the opposite direction, and a number of banks have got 110, 115, all the way up to 125.
Huge numbers, James.
Now,
just massive,
it's difficult for me to disagree.
Massive numbers. Right? 115 at Goldman, others looking for more. Still need to let this one flesh out and really get a deeper understanding of what's happening, because some of these names are behaving like the sanctions are already there. Coming up, your morning calls, that's next. This is Bloomberg.
soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Futures down 0.2%. Your morning calls start now. Truist downgrading Charter Communications, anticipating elevated pricing pressure and further market share losses. Tassie Advisory upgrading Kroger, expecting upside given management's new focus on digital growth. And finally, B. Riley downgrading Foot Locker, highlighting the retailer's disappointing outlook. Coming up, geopolitical uncertainty boosting the energy sector. That conversation just around the corner with this man, Mohammed Al-Arian, next on Bloomberg.
I'm here at the Delhi airport, and behind me you can see SpiceJet's 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
20-something seconds away from the opening bell in New York City this morning. Good morning. Futures look like this, recovering off session lows. We were down more than 1% on the S&P. Now we're down 0.25%. On the Nasdaq, down by 1/3. On the Russell, the small caps down by 0.2%. 2 months of losses to start 2022. The third month of the year starts right now. Switch up the board and get to the bond market. Your 10-year yield coming in lower, 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 then bouncing back a little bit, down 5 basis points to 177. Big bid into the European bond market. Bunds rallying, BTP's rallying. The theme of this morning, the euro weaker. Euro dollar 111.53, down by 0.6%, and crude higher through 100, through 101, 101.10, up by more than 5%. That's the price action. 20 seconds into the open. Here are some movers. Here's Abby.
John, let's stick with that energy strength because we do, of course, have both Brent and WTI crude absolutely soaring above $100 per barrel, the highest level since July of 2014, of course, on supply fears around the Russian invasion of Ukraine. You can see ExxonMobil and Occidental Petroleum soaring. Exxon off of its highs, but still up. On the other hand, you have the big banks lowered. This, of course, as yields come in on that bid for bonds that you were talking about, a continued theme that we are seeing. And then taking it to the earnings story, we have Target having its best day since 2019, a very strong quarter, November of 2019. They beat estimates. The outlook extremely strong as the pandemic boom is expected to continue. Kohl's put up a great quarter, strong outlook, and AutoZone beat sales. Investors like it. So a good day for retail in an otherwise sort of mixed morning so far, John.
Abby, thank you. Big focus over the last couple of days, not just on energy, on defense stocks as well. Kaylee Lyons dropping by for more. Hey, Kaylee.
Hey, John. Well, obviously, those defense stocks have gotten a lift as we see the situation escalating in Ukraine and see escalating Western response as well, particularly Germany pledging to up its defense spending. But on the energy side, this, of course, is primarily an oil story. Concerns about potential supply disruptions from Russia giving a lift to crude prices up more than 10%, nearly 11% for WTI over just the last 2 days. We are now back north of $100 a barrel, the biggest two-day gain since September of 2020. And no surprise, as Abigail was detailing, that has provided a lift to energy stocks. The moves today are a lot smaller than we saw with some of the shale players in particular yesterday. We're up about 1 percentage point across the board for the likes of EOG, Diamondback, Devon Energy up by about 0.75% as well. It, of course, the fifth best performer in the S&P 500 this year, was the best performer last year. And I actually caught up with the CEO, Rick Muncrief, yesterday about when he would start to pump more oil with prices this high. He still was talking about discipline, though the Biden administration hasn't talked to him about the possibility of boosting production given some of the inflationary pressures within the market. And one final note on these energy stocks, John, yes, they have done quite well, but oil has done better. They are still lagging the price growth in the underlying commodity. And of course, it still trades the energy group at a much lower multiple than the rest of the market. So any continued value rotation from here, these stocks could benefit from that, John.
Kaylee, did he suggest that Secretary Granholm has not picked up the phone?
He just suggested that he has not yet been in talks with the administration. It's something we also heard from the Pioneer CEO last week, that even if the president did call, he wouldn't be pumping any more oil. So it's definitely a theme, but the Biden administration doesn't seem yet to have done those reach outs, John.
Interesting times. Kaylee, thank you. Joining us now from Queen's College, Cambridge, from Gramercy and Bloomberg Opinion, Mohammed Al-Arian. Mohammed, in the FT earlier this week, in the past week, you talked about being early in the process. I think, Mohammed, that's a really good place to start. We're still early in the process. As we work all of this out, what are you focused on?
So, John, first and foremost, I am focused on the humanitarian tragedy that's going on with the growing number of atrocities, and that's something you have to worry about in terms of early in the process. In terms of markets and the economy, we are yet to see the full impact of what's going on in markets, on the economy. And when I say in markets, John, I even include the ruble and what has happened to Russian assets. We are still early in the process. This thing, unfortunately, doesn't go away soon because no one can figure out what the off-ramp is for President Putin.
Mohammed, when you start disrupting capital flows to an economy like Russia, which we depend on so much for commodity exports, is it inevitable that you disrupt energy flows even if you don't want to?
So first of all, never underestimate the power of crippling a payment system. It brings the economy to a halt. We felt it in 2008 when it was counterparty risk between banks. That impacted the banking system. Russia is now having its payment system crippled. And that brings to a halt a whole series of things. The energy markets still believe that you can have a carve-out. They still believe that you can have an effective way of shielding energy supplies. Let me tell you, for someone who has lived through various dislocation, it is very difficult to be surgical in the midst of such disruptions to the payment system. So I think we still are overestimating the amount of energy that's going to be supplied to the marketplace unless other producers increase output.
Where are you looking for signs of stress at the moment, Mohammed?
So, of course, it is, first and foremost, it's in Russia. It is everywhere in Russia. It is an uninvestable place in terms of virtually all financial markets. It is in those exposed to Russia, and we haven't yet seen the full impact of that, but you've been talking about European banks. We've seen quite a few mutual funds get hit quite hard, and that's sort of round one. Then keep a very close eye on flows. Figure out where is the pain trade and who's going to try to get back on side. And then longer term, John, this is a significant increase in the stagflationary winds blowing through the global economy. The marketplace today is, I think, relieved that that means that the Fed will tighten less, and I think that's correct. I always thought it was ridiculous, this notion that they would tighten 8 to 9 times this year. I think the marketplace now sort of is coming down to a more reasonable amount of tightening. But what the marketplace hasn't recognized is there's a reason why the Fed will tighten less. It's not because inflation has a better outlook, it has a worse outlook, is because growth has a significantly worse outlook for the global economy.
I want to pick up on the last point in just a moment. You made several other points there. On the signs of stress, people lining up to dump assets. Mohammed, the gates are closed, and you can see the gates are closed in several funds. The exchange is not even open in Moscow. One way of expressing that is through European banks. You touched on that too. Raiffeisen is down by 8%, ING by 7%, SocGen by 6.65%, adding to the losses over the last couple of days and year to date as well. Mohammed, when you get a series of people, investors and companies, lining up to dump assets all at once and the gates are closed, traditionally in history, what are the spillover, the consequences from that?
So when you can't sell what you want to sell, you sell what you're able to sell. And that's how you get contagion. So it's one thing for, let's take a mutual fund that has been caught offside in Russia. It's one thing for the mutual fund to tell investors, we can't sell our Russian assets, and we're going to maintain what we think is long-term value. That's fine. I can understand why they'll say that. But what happens if the investors start taking out their money? Typically, these mutual funds are forced to raise liquidity, and they have one of two choices. Either they sell other stuff, and that's how you get contagion, or alternatively, they put up gates, which is a massive business decision. So, these things don't happen immediately. I can take you from crisis to crisis, where crises react first, market liquidity reacts second, and then third are flows. So that's why I think it's critical to keep an eye on flows, because that's what causes contagion if we start getting outflows.
More broadly, Mohammed, on the last point, we seem to be taking some comfort. This was the point you made moments ago, from a Federal Reserve that maybe doesn't do 7 hikes this year, it does a few more. Perhaps doesn't hike 50 and only hikes 25. That's the short-term story. Does that just lay the ground for more problems? Does that become more problematic at the end of this year, Mohammed, going into next year?
Yes. I mean, remember, we entered this in the Fed in a hole of its own making. We no longer had a first best policy response because the Fed was late and missed the orderly windows. Now the Fed faces an even bigger challenge. In the short term, I think rather than slam on the brakes and cause a recession, they're likely to opt for tapping the brakes. But that means that the inflation issue becomes more persistent, and that has its own consequences. So that's why I'm saying, John, it's early in the process. I understand people who want to buy the dip. I understand this notion that the Fed will be less hawkish. I understand the valuation argument. I understand all these things. But in reality, we're looking at so many potential outcomes with technicals playing a much bigger role and not being offset by stronger fundamentals. The fundamentals are weaker today than they were a week ago.
Mohammed, you squeezed us in this morning. We appreciate that. We always appreciate catching up with you. Thank you, sir, as always. Mohammed, Al Aaron of Queen's College, Cambridge, Gramercy, and, of course, Bloomberg Opinion. Back with us, Victoria Fernandez, Michael Purvis, James Athey. Michael Purvis, you listened to some of that. Too early in the process to draw conclusions. Your thoughts?
Well, sure. I think there's a wide spectrum of sort of new unknowns. One thing that is, I think, is pretty consensus is that we are likely to see higher inflation and probably lower growth here. I think on this, higher inflation and how the Fed plays into this, I think, for me, the most obvious tool to fight this incremental inflation issue is really not through Fed policy, but it's really, it comes down to sort of ESG, both at the policy level and it's sort of at the, if you will, the market level as well. And, one of the casualties of this war is really the pace of decarbonization. I just, the midterms are around the corner. You referenced your discussion with Devin and the sort of lack of communication between the White House there. But if oil prices are going to keep climbing, I have a hard time thinking that there's not going to be, an increased pace of softening of the stance on getting the shale response back to where it was back, before COVID there was. I think it's important to step back. And when you think about the inflation dynamics that have come over the last, really since COVID, there's been three pillars. One was monetary stimulus, the shock and awe of that, the fiscal shock and awe. Those two shock and awe's are in the process of normalizing. The third pillar was really ESG that happened to be concurrent, and that comes down to everything from the cost of capital for Exxon and its ilk to higher regulations, and on both sides of the Atlantic. Now with the war, this is a game changer. I think, to my mind, ESG is going to be redefined in the coming months, and it's going to be less environmental and more things about, more macro related as it relates to making sure.
Well, Michael, let me pick up on that because the point you're making, I think, is critical. Victoria, ESG has been this fluffy term that some corporations have thrown around to appease people at home. Then abroad on the international scene, I mean, let's just talk about the reality of things and talk about the hypocrisy. You'll have companies that do very progressive things in America that then still deal with China, still deal with Russia, autocratic regimes, and they'll say things like, we just do what the US government allows us to do. If they tell us we can't, we won't. But at the same time, they talk about ESG and social responsibility. Now, Victoria, they've even got a moral compass, or just a compass that's set by the US administration. Which one is it? And to Michael Purvis's question, does it take on a different character in the coming years?
Jonathan, we actually saw ESG take on a different character even during COVID. So we have a large percentage of our assets that are actually screened, some for socially responsible, some for ESG filters. And during COVID, a lot of the environmental component shifted and it became much more about the social and the governance components. And I think we're going to continue to see that trend. Due diligence questionnaires coming in are all about how you're treating your employees, the things that you're doing to help better the society that you're in. And I think that's what we're going to see going forward. And you're right. It's kind of you've got two stories going on. You've got a domestic story and you've got an international story. Europe has such strong parameters around some of their ESG reporting. The U.S. does not at all. And I think that's another area because of what Michael was talking about. That's an area we're going to start to see more of. I think you're going to start to see more restrictions come in regards to ESG. I think you're going to see more regulation and how companies report things. That all feeds through, especially when you're looking at mutual funds that have this ESG component to them or individual investors. So I think it's going to be more complicated. You're going to have to really dig down with your money managers and find out how they're screening and what they're screening out. And it's going to become more important for your end investor over the next 12 months.
James Athey, I wanted to get your thoughts on something Mohammed said just quickly before we run. We're still overestimating the amount of energy that'll be supplied. All of these issues we're talking about in the last 44 minutes, that's what it comes down to. Are we still overestimating the amount of energy that'll be supplied? Yes or no, James?
I think that's probably a reasonable starting point. I really don't know the answer to that. I'm sure commodity experts probably would struggle to be high conviction on the answer, but everything that we know, Russia produces, 11 million barrels per day, and that's roughly 10% of global oil consumption or global oil demand. That's a pretty significant number, and there are risks to that number not being able to find its way to those that need it. So if we were already in a tight oil market, which it seemed to be partly for these sort of ESG and investment reasons, everything that was happened in the last 2 weeks is certainly at the margin exacerbating that problem. Yeah. And again, OPEC is unshifted at 400 barrels per day, and the strategic reserve is tiny. So I think that's a pretty reasonable assertion at this point.
James Athey, thank you, sir. To all three of you, thank you very much. Victoria Fernandez and Michael Purvis, too. A headline from the energy company Centrica planning to exit gas deals with Russian counterparts. That from the CEO just moments ago. Coming up, looking ahead to President Biden's State of the Union address.
The president will lay out the efforts he has led on to rally the world to stand up for democracy and against Russian aggression.
That's next. This is Bloomberg.
Put us on everything.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines will work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
The president will lay out the efforts he has led on to rally the world to stand up for democracy and against Russian aggression. And he will talk about the steps he's taking to mitigate the impact of President Putin's invasion of Ukraine on the global economy and the American people.
These stakes are high for President Biden. A White House official previewing his State of the Union speech saying the following: Biden will spend time talking about the importance of American leadership and the work being done to rally the world to stand up for democracy. Anne-Marie down in D.C. for us. A headline just coming from Secretary Blinken in a pre-recorded address to the UN Council, Anne-Marie. Blinken questioning Russia's membership in the UN Human Rights Council. You imagine this is going to be a big feature of the address a little bit later.
It certainly is, Jonathan, and we should note, not since President Obama and the financial crisis and George W. Bush in 2003 making his plea to the American people to enter Iraq that we've had a president have a State of the Union address, which for the most part is usually focused on domestic concerns, that so much of it is going to be focused on foreign policy. Tonight is really going to be about inflation and in Ukraine. And Jonathan, they really all meet, these two stories together, because especially this is an issue the administration is facing when it comes to consumer prices, especially when it comes to gasoline. And we are seeing that geopolitical risk premium in the oil market, Jonathan. So the president tonight is going to have to really discuss both of these issues, which in our minds are really intertwined.
MH, what do you make of the fact that there hasn't been enough outreach to the oil patch to get them to do more? We heard from Devon Energy. You and I touched on that a little bit earlier. Is that going to come up at all? We were thinking about whether this accelerates the transition away from fossil fuels or maybe reverses it in some places too.
Well, the press secretary Jen Psaki over the weekend, when she said on ABC this week that energy sanctions were firmly still on the table. This is something the administration is trying to create a carve-out for to protect American consumers and European consumers as well, and the global energy market in general. They did say that this shows that the president is, in his mind, correct in the sense that it's time that the world, including the United States, which Joe Manchin was saying yesterday, why are we still buying Russian barrels of crude, because the United States still does, that this should accelerate that transition, that no country should depend on foreign fossil fuels. And this is a reason to invest more money in climate. And I imagine that's the pitch this president will give to the American people, because, Jonathan, at this moment in time, the situation means he's become a wartime president. But if you remember clearly during his campaign, he wanted to be a climate president.
Anne-Marie, thank you. AMH down in D.C. Just getting a headline from AFP from the German finance minister. The G7 discussed further sanctions against Russia. We've had a pretty strong suggestion of that through the morning. The headline that jumps out at me is from Interfax. Russia still working on how to respond to sanctions. What do the counter-sanctions, the response from Russia, actually look like? All of this coming ahead from a ton of Fed speak. Bostic, Mester, Evans, Bullard all speaking over the next couple of days. And then Chairman Powell, Mike McKee, tomorrow. Mike McKee, you're the Fed whisperer. Help us all understand what this means for this central bank, the leadership, and Chairman Powell.
Yeah, it means more confusion and a little less guidance for the markets. I mean, for the Federal Reserve, like the ECB, it's all about Russia, the war, and commodities. In the 70s, central bankers learned to put up with commodity price spikes, especially energy, because they are essentially temporary. But what we're seeing now is a time frame when the prices are already very, very high. You can see what happened in Europe the last month in February, and this is pre-Ukraine. And you can see what the forecast is for U.S. CPI next week when we get that. The Fed doesn't know what this is going to mean for the economy. They don't know if this is going to really slow the economy. The Atlanta Fed GDP Now Index tracking growth at just 0.6% for this quarter. Does it rebound? That's going to be a big question. Those are the kind of questions that Powell is going to face over the next 2 days up on Capitol Hill. Also, he's got to worry about whether or not inflation expectations become embedded. And you can see there, traders have basically priced out 50 basis points now. They're looking for only a 25 basis point move in March. And even with those inflation numbers, they're not looking for anything from the ECB yet.
Mike McKee, the ECB, March 10th. March 16th, the Federal Reserve. Mike, thank you. Coming up, your trading diary. Tons of Fed speak and Chairman Powell just around the corner. Coming up later this week. From New York, this is Bloomberg.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
"25 minutes into the session, equities down just a little bit stateside by 0.5% on the S&P. Over in Europe on the Euro Stoxx 50 and on the DAX in Germany. Guy Johnson will run you through that. Down by more than 2%. In the bond market, the bid at the front end sticks. We come in by 8 basis points to 135.46. Remember, on Friday's session, the high north of 160 all the way in as we start to reprice and rethink the Fed's path through 22 and perhaps beyond as well. Will that stick? That's the price action. Here's the trading diary. ISM manufacturing numbers, top of the hour. Then more Fed speak. Mester and Bostic speaking later in the day. President Biden's State of the Union address at 9 p.m. Eastern Time. Fed Chair Jay Powell Wednesday, Thursday before Congress. And we round out the week with payrolls Friday. Your estimate so far, a moving target, 403,000 from a previous number of 467. From New York, this was the countdown to the open. This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
898, I won! Look for the winning number in Sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the street, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing, of trucks. And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking, and of course Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance, they say, is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired 2 consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145. and another hearing for the branch 113A, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19 they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as the coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack on the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained 1 man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venergold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venergold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venergold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venergold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why. He may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Venergold as an opportunity to leave that troubled home. Venergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Venergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Venergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Venergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, 1 kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At 1 kilometer, it's still going to be very bad and will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small and space is really big. And then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if you go forwards in time, would fall on the surface. You calculate them backwards to today. And then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's just kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. Asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000!
Here's a stock that can change your life.
I see a stock going up and I buy it, and I just watch it until it stops going up, and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter, it's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers, one of the last holdouts in the world of disruption, finance is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating, where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission, that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
There's Fidelities and the Schwabs and the E-Trades of the world. They look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers.
Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that the younger generation was exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes, I'm losing money. I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be, 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk-taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only part of the puzzle. Sure, you can trade on it, but without research, information, and data, you're just blindly throwing darts at different stocks and hoping to strike it rich.
Wall Street forever has always run on what we now call narratives or memes. You know, people telling rumors to each other have been around for 100 years.
On Wall Street, information is its own currency. Historically, either you had it or you didn't, and the people who had it had a huge advantage.
In the past, those narratives and memes didn't have a network effect. It would be one person telling another person over the phone. In fact, when I broke into this business in the 80s, a lot of people used to complain that they weren't on the call list to get those ideas.
Social media changed all of that.
Fast forward to 2021, that's being done on the internet now. And that's being done on Discord and Twitter and StockTwits and Reddit. And the impact is very similar, but orders and orders of magnitude larger.
As social media has played a bigger part in our lives, it's also played a bigger and kind of more important role in how people find investing ideas online and on these platforms.
How do those ideas spread? On TikTok. Yes, that TikTok.
Soon may the weatherman come to bring us sugar and tea and rum.
People aren't just going to it for sea shanty videos.
The personal finance hashtag on TikTok has garnered 3.5 billion views from its 1 billion monthly active users. By comparison, videos found under the cooking and health tips hashtag have 2.6 and 2.1 billion views respectively.
The trajectory of Robinhood and TikTok were literally on par.
What happened in the stock market this week? So the word of the week is expectations.
Absolutely essential that you guys understand the risks of shorting.
And Kayla Kilbride and Kyla Scanlon are two of those financial influencer TikTokers, also known as finfluencers.
I think people still care about fashion, they care about culture, but it's also like there's this big behemoth thing called the stock market that we really don't know a whole lot about, and it's gatekept behind the industry. And so people like want to unpack that. And so my audience is, a lot of them are younger investors who are looking to hone their skills.
Tech and write up.
Kyla and Kayla are two of the more, let's say, professional TikTok influencers.
The Tesla ARK Bitcoin Biotech Risk Cluster.
I've been trading since high school, and it was a really interesting way for me to fill out my decision-making frameworks and to think about thinking. And I think that the more that we can have people thinking about finance, the better that we're going to progress as a society. I think it's a huge gap in our educational system.
If you're going to buy an option for a stock you think is going to go up, it's a call. So think of it like this. I made the options video where I was like, options are just like shopping. Rumor has it that this pallet's about to go up in price. So if I come in tomorrow, can I still buy it at said price? And a ton of women just like attacked that video and were like, you explain things so much better than my boyfriend or my professor, or like I could sit and listen to you all day. And I was like, this is what I was looking for.
But TikTok's algorithm does not reward calm and measured videos about responsible investing. It rewards this.
Watch this video for 30 seconds and you'll be rich for the rest of your life.
I try not to say the A word, the ALGO word, because TikTok listens to us.
The algorithm does impact how you feel. You know, you do notice which videos do better versus which videos do worse.
How do you catch someone's attention in less than 60 seconds? And how do you make it something that they're like, I need this in my life? Nearly impossible to do that in 60 seconds. But the people who perfect it are the people that you're going to watch and going to stick around.
And where people are sticking around? Reddit. And its nearly countless subreddits about finance. And by far the biggest one of those is Wall Street Bets.
There's a lot of social media platforms out there, but Reddit is like the social media platform for finance. Places like Wall Street Bets is where it all goes down.
Started in January 2012, it wasn't long before Wall Street Bets adopted a 4chan-like etiquette, leading to their tagline, like 4chan found a Bloomberg terminal.
We had all these unexplained stock moves, and we would be grasping for why stock XYZ jumped 20% in a day. And you would look at Wall Street Bets, and you would see people there talking about buying options in that stock, and it sort of, squared the circle, so to speak, and started making sense. And it was at that point that it was like, wow, we have to start paying attention to this.
Some people on the platform really spend tons of time, and others are just looking for entertainment and to have a little bit of fun, effectively gambling or looking for an outlet, trying to make a little bit of money.
Then on top of all of that, there were stimulus checks. Now clearly this money is going to people who need to use that to eat, to live, but there's a lot of people who use this money to invest in the stock market.
And it's not just stock tips. People quote unquote YOLO their entire life savings or stimulus checks on a single stock. They post what is called gain and loss porn, screen grabbing staggering hits and misses on stocks for the entire community to see.
I'm about to lose everything.
And while some of the people on Wall Street Bets are novice investors, the community contains multitudes.
In one respect, what it did show us among these network groups is they are very sophisticated. They're not a bunch of ignorant people talking to other ignorant people.
And this is where the pieces of the puzzle all come together to wreak havoc on Wall Street for a solid week in early 2021.
It's pretty clear that the combination of more people having retail brokerage accounts and trading apps and more people being stuck at home looking for some kind of entertainment and some kind of community online came together in this very singular way.
What came together is GameStop.
Let's go back to the beginnings of what happened with GameStop a couple of years ago. On the boards like Reddit and StockTwits, a lot of people were talking about GameStop as being attractive value.
Some of them are even, Wall Street alums who left the industry and now still have access to tools that they can use to improve their financial well-being and make very good decisions. And I think Roaring Kitty is a perfect example of that.
GameStop is one of the most compelling asymmetric opportunities in the market today. Really, I don't understand how you could disagree with that.
At the same time that this crowd was talking it up, the hedge fund institutional crowd didn't like this stock at all, and it had the largest short interest of any stock in the New York Stock Exchange going into late 2020.
Short selling is a bet that a stock price will fall, and it's a fairly simple concept. An investor borrows a stock and then sells it. The investor is betting on buying the stock back later for a lower price, before returning it to the original owner, pocketing the price difference.
What a short seller would tell you is that they almost act as a policeman in financial markets, or they're at least looking for companies that aren't what they say they are. And that can range anywhere from an outright fraud that some short sellers try to expose to just a company that's not worth as much as investors think it is.
The problem is, if the stock price rises, the short seller has to come up with the money to buy the stock back. And the more it rises, the more it costs. And that's what's called a short squeeze. And the hedge fund Melvin Capital was on the wrong end of that squeeze.
Melvin Capital lost over 50% of its money in the month of January alone, just from being caught in the short squeeze of the stock.
This is where the disruption comes in.
One of the most wild stories you're ever going to see. GameStop shares absolutely going nuts.
In less than a year, the company's stock has jumped from less than $3 a share to almost $350.
Cheers, everybody!
Roaring Kitty has turned $50,000 or so investment into some $14 million.
Whoa!
Investors all over social media use the free trading app Robinhood to wreak havoc on Wall Street.
They're actually piling on into some of these stocks to really hurt the professional short sellers.
And they all used Reddit, Twitter, TikTok, and Discord to tell one another to keep buying and, quote, hold the line and not sell GameStop.
People are getting cheerleaded for jumping in, buying at the highs. They're saying, keep going.
And it was working too, until
Thursday morning, the trading app Robinhood sent out this tweet. In light of current market volatility, we are restricting transactions, including GameStop.
People were really angry.
Robinhood was supposed to allow the regular people to play the same game these big boys are playing. But instead, we were all taken for schmucks, and they screwed us.
Shares of GameStop are jumping again now that retail investors are being allowed to buy shares of the stock.
But what we learned is that when people organize online, they have the ability to disrupt the market.
And it was a big sign. The ivory walls of the institution aren't as powerful as maybe the institutions thought them to be. I don't know if pumping up GameStop was the best use of billions of dollars, but I think that as a signal to society, it was pretty interesting and powerful.
The GameStop saga was so impactful that both Vlad Tenev and Roaring Kitty were called in to testify before Congress to clarify each of their roles in the saga.
One thing that's emerged from the congressional hearings is that they're interested in how retail brokerages make money and whether they're keeping the best interests of their customers in mind, but it's pretty fuzzy as far as what they would actually do as a result.
While the frenzy around GameStop eventually subsided, it didn't take long for retail investors to find other areas to invest their money.
Take a look at Bitcoin going bananas over the weekend.
Bitcoin forms a brand new all-time high.
It was after GameStop started to drop that we saw Bitcoin really go up to over 60,000.
How much further does this rally have to run?
It's compelling to say that money shifted from one venue to the other.
While correlation doesn't equal causation, there's a chart out there showing an inverse correlation on meme stocks going down and cryptocurrencies going up.
There's definitely an aspect where people are making money on stocks and then moving, they're agnostic, they're not hedge funds. They can invest wherever the hell they want. It's a classic sort of momentum trade. They're going to wherever the winners are and they're willing to jump on and, ride it.
So whether it's meme stocks like GameStop, meme coins like Dogecoin, or entirely new ways to invest in art like NFTs, the new kind of retail investor is making its presence known.
Over the next 10, maybe 15 years, you're going to continue to see, whether by choice or by force, that baton go from older generations to younger generations. I don't think any single app is going to be the thing that disrupts. I think people are the disruptors.
How people get ideas about what to invest in has become increasingly entwined with social media. And as social media companies govern more and more of our lives, the fact that now they're tied in more intimately to people's wallets is something that we might want to understand better.
Usually what disruption, I think, means is technology comes in, whether it's blogs,